Vin says, "Hi, Austin and Robert. I've had the great privilege to offer my tenants a rent to own lease to sell my investment condo in Austin, Texas. I'm hoping to offer seller financing to optimize my profits. How would you recommend I consider and evaluate structuring a rent to own lease and seller financing? My condo is currently renting for 1% of the purchase price per month with a 10 cap rate. It also has a 2.75% mortgage rate. It's a great investment property by the numbers, but I just really don't enjoy managing tenants. And although my current tenants are wonderful, I get too much anxiety at the thought of screening new tenants in the future. I concluded that the rent to own and seller financing would be worthwhile to take profits while also seeing a new family happily live in their new starter home. Another factor influencing my decision is with the economy and interest rates. It's very much a buyer's market right now, and structuring a purchase contract for a contingent sale 3 years later will hopefully provide enough time for real estate to recover. But I really just don't have any data, and so I'm just assuming 3 years will be enough time. Thank you so much for your thoughts." So Robert, I don't know anything as it relates to seller financing, a rent to own, lease, investment condo, any of this stuff. So I want you to just take it away here, define what Vin's talking about, break it down into the layman's terms, and teach me how, if I was in Vin's shoes, how to approach, evaluating and constructing one of these seller financing rent to own lease contracts.
Okay, Vin, great question. And I'll do my best to break it down, not only for you and Austin, but everyone listening. First and foremost, you're going to need a real estate lawyer because you're going to need someone to draft a land contract for you to be able to do this owner financing. It's not difficult. Any good lawyer is going to be able to handle it very simply. And you're also going to need an amortization schedule so you can calculate what the payment is going to be. And on top of that, you're going to have to come to an understanding of what is the interest rate you're going to charge in this land contract. Right now, I would think you could probably charge 8%, maybe 9%, because someone that needs or desires owner financing is willing to pay a little bit more interest, and that helps you create more profit in the deal for you. So now you have the land contract. What is it? Basically, what a land contract is, it's the document you're going to create as if you were the bank or the mortgage lender that spells out the terms of this purchase agreement. That's what it is. The amortization schedule is going to spell out what is the principal and interest that this person in the land contract is going to pay for that 2, 3, 5 years, and then have the balloon at the end. Because remember, you don't want to carry this like a mortgage for 30 years or 15 years for someone. You want it to be short term to get yourself in a situation where you can make more money on this deal. That's why many times owner financing can be highly profitable for the seller like yourself. So we know what the land contract is, we know what the amortization schedule is, and we know that we can charge a reasonable interest rate, like I said, 6, 7, 8, 9%. All of those are very favorable for you to be able to do this, but I strongly recommend you have a lawyer help you to get it all in order and make sure you understand the documents and the agreement for not only you in the land contract, but also for the person buying the property. What are you responsible for? What are they responsible for? And make sure that you understand all of the default mechanisms as well, because you want to make sure that they understand when buying this, they have to keep up the landscaping. They have to make sure to do reasonable improvements to make sure that they don't let the property degrade. All of these things, a good lawyer will help you calculate and put in this land contract to protect you in the long-term sale with you doing owner financing.
Now, this might be a silly question, but despite it being a condo, it's still called a land contract?
He mentions a rent-to-own lease. I don't do those. I don't know the difference of if that's actually real, where you could do a lease, but you're renting to own it. To me, it's just a land contract at its origin. So yes, you can definitely do it with condos, and you just have to make sure that you understand when doing this is make sure there's no due on sale clause with your current mortgage, because you need to check with your mortgage company first and say, this is what I'm going to do. Make sure there's no issues if there is an HOA with being able to do this in your community, in your condo community. So there are other things to look for. So that's a great question, Austin, to make sure that you qualify qualify to be able to offer this before you get the cart ahead of the horse.
This is a great breakdown. So now I'm curious, as it relates to, let's say we fast forward 3 years, you mentioned this balloon payment. Does that mean that 3 years later, the person who's purchasing the investment condo in Austin, Texas, goes out and gets a normal mortgage and then takes that money and buys the condo from Vin?
Yes, yes. And where it becomes advantageous for them is, let's say interest rates do come down in 2-3 years, and there is a clause that they could buy out of the land contract early because interest rates plummet back down to 3, 4, 5%, then Vin would get his cash out at that time. It's just a great way to do business because many times you might have a really motivated buyer, but they may not qualify for a mortgage, or they're trying to avoid the really high interest rates right now that they would get from a traditional mortgage. And that's where Vin has some leeway, because if they say, hey, I can get a mortgage right now for 7.75% over 30 years or 15 years, and Vin says, well, hey, I'll do it for less down payment and I'll do it for 6%, it gives you more negotiating tools to be able to get the deal done.
Got it. Okay. That makes a lot of sense. Shout out Vin for being so smart to think about this. I don't really, as you can tell, have much understanding of it. I've never done anything like this. So shout out Robert for being able to explain it and walk everyone through it. Wishing you all the best, Vin. I think you're gonna do just fine in this situation.